Hello, traders. Welcome back to Simply Forex and the Sit on Your Hands podcast, the show where we interview seasoned traders, where they share their knowledge, wisdom, strategies, plus much, much more, guys, right? And I am super excited about our guest today. He is the author of The Pro Retail Trader and The Rough Guide to Trading. Plus, he has over 20 years of experience in trading and is a six-figure trader as well. Also a premium presenter on fxstreet.com and over 1 million views combined on YouTube. So please welcome Steve Ruffley. How are you, Steve?
I'm good. How are you, Tom?
Yeah, very good. Thanks, Steve. And where are you calling from? What part of the world are you in?
In sunny New Zealand as we speak.
Okay. And it is sunny there right now, because I know they have the occasional storm whip in.
Yeah, well, it's the four seasons in one day, isn't it? The old Crowded House song. It's pretty changeable, but yeah, the weather's been pretty good, to be honest.
Yeah.
Sorry to all the guys back home in the UK, but yes, pretty nice.
It's all right. I always rub it in about Dubai, Steve, and the weather. So, yeah, and I detect the northern accent. Where are you from originally?
Yeah, originally from Bolton, so yeah, that's where I grew up. When I left Bolton, lived in a few places, so yeah, haven't been back to the UK for a long time. So the thing is, when you're this far away on the other side of the world, got a lot of family, so I'm generally entertaining people. I think we've had people every 3 months outside of COVID for nearly 8 years now.
Yeah, it's the same in Dubai. They're like, "Oh, can we come out on holiday?" I'm like, "Yes," but I'm also glad when they leave, so I can pick up the pieces of my life again. You know.
Oh, well, absolutely. When you come here for a month minimum. So yeah, it's a lot of entertaining.
Yeah. And a Bolton Wanderers fan?
I've been to plenty of Bolton games, Burnham Park. I'm that old, but yeah, and the Reebok. But actually, a Liverpool fan. Mum's a
Okay.
scout, so it was kind of you support Liverpool or go and live somewhere else. So yeah.
Yeah, fair enough. Me too. You can tell by the strong Scouse accent that I've got.
Oh, for sure, yeah.
So yeah, all right, Steve. Well, yeah, brilliant. We're really glad to have you on, and got some great experiences, I'm sure, with regards to trading and your journey in general. And that's really what we want to talk about. Really, is understand your journey from a lad from Bolton and how you got into trading and where you are now and what you're doing and your journey along the way. So let's start at the beginning, right? So how does a lad from Bolton get into trading? Were you in the finance economic world, or was it you doing something different and you like the idea of trading?
Yeah, I mean, interesting. How does one get into trading from Bolton? Well, my kind of journey was I went to university for a grand total of 2 weeks, and yeah, went to study economics, and had a bit of a chat to the lecturer. And me being me was just like, "Nah, mate, you haven't got a clue. You don't know what you're talking about." And it was that old kind of like, "Well, you'll never get a proper job without a degree." And I just thought, "Well, I'll prove you wrong." So yeah, my first job was a graduate job anyway, without a degree for PricewaterhouseCoopers. So that was basically placing investments for various clients. And that's the first kind of experience I had of, the investment world and that kind of stuff. So after doing that for a few years, I ended up in Gibraltar, of all places. We had some family out there. I've been going there for years on holiday. And just coincidentally, I was down in Banús. There's some guys down there at the bar, a lot of flash cars as Banús is, and got chatting to these guys. And they were saying, well, we're traders. I was like, that sounds good. He goes, well, we're opening a trading floor in Gibraltar. I'm like, well, if that. It's like, well, come and give it a go. And that was my first kind of introduction to trading. And I became one of the first Revco grad kind of scheme that they ran. So that's where they train people up to be traders. So we were kind of shipped off to London, Den and O's Court, me and about 6 other guys. And yeah, we're down in Liverpool Street on the trading floors, these kind of day-to-day tests, big reading lists, big that kind of stuff. And bit like I described in the book, bit like the original Apprentice. But it was, yeah, if you didn't kind of pass periodic tests and you didn't kind of prove you're up to the task, you did get fired. And people were certainly booted off the course. So that really, in a roundabout way, is how I got involved. My start in trading was just meeting the right kind of people, like old-fashioned kind of serendipity, I guess. It wasn't like I grew up and I wanted to be a trader.
Yeah.
It just how it kind of came about.
Yeah, like most things really, it's who you bump into, meet the right people, and opportunities happen. So yeah,
Well,
and
it used to be like that, didn't it? It used to be like
yeah,
that, but people don't socialize these days, and everything's about,
no,
meaningless interns and,
yes,
having to jump through hoops. This was, like, they didn't really have a kind of an idea about who they really wanted. It's just kind of, it was always blokes, a
yeah,
relative,
yeah,
kind of age. And, I'm not saying, that there wasn't a bit of a, you laid on thick, PricewaterhouseCoopers, and I was head of this, head of that. It's like, you're right, Steve. Come on, give it a
yeah,
go. So yeah, it just kind of all kind of fell into place. But as everyone knows, when you first start trading and you get into it, it isn't exactly what you think. So the journey went on
no,
a long time from there. There's a lot of
yes,
other ups and downs on my journey, just like every other trader. You don't
yeah.
just rock up and hit the mouse and smash it.
No, and I love HR back then. Like it was just, all men, and you got the sack if you didn't perform. HR, you couldn't do that these days.
Oh
But
mate,
yeah,
it was a proper, and probably still is. I've managed floors in London as well, and it was always very men, centric, and I've
yeah,
met very few female traders. Not saying there aren't good female traders, I'm sure there are, but it was just, yeah, it was a very much a man's world back then.
yeah, sure. And let's start with that training that you received. What was it based around? Was it based around technicals? Was it based around fundamentals? Was there an exact system and way they wanted you to trade, or was it a case of here's the fundamentals and of technical and fundamental trading, and you create your own kind of strategy, or was it very specific?
Well, it's very interesting. I go through this in the book as part of my journey. There was a lot of fundamentals, a lot of kind of technicals, not direct technicals from them. They did say, here's Stevenson's book on candlesticks, yada yada, the usual. So there's a lot of that kind of stuff. But no, they didn't actually teach you to trade. So it wasn't like the turtle traders, that kind of
Okay.
scenario. It was more like, here's everything you need to know. Here's six
Mm,
screens. Here's a room full of blokes that are smashing it.
mm.
Go and make some money. And that's what I
Exactly.
didn't get. So I'm kind of like, right, well, I know stuff. I kind of get it. What do I do? It's just like it's a
Yeah.
baptism of fire. And don't
Yes.
get me wrong, there was a lot of the grads didn't make it. I myself, when I first started trading, I had £10,000 days and that kind of stuff. But I wasn't making enough money by the end of it. I mean, it's the original kind of prop firm type stuff. So you
Right.
don't start with an exact amount of money. It's essentially just an overdraft. So,
Mm.
you've got desk fees and that kind of stuff, and also for the privilege of your education. My buyout clause was £250,000. That's going back when £250,000 was still a lot
Mm.
of money.
Yeah.
So you had to make that money and pay Revco back before you could continue. So
Mm.
I think there's only one guy I knew that actually did it and paid the £250,000 back. And yeah, I since worked with him a little bit, and he was a legendary trader. I doubt you'll ever get him on your podcast. But I got I got a good amount of experience. I did all right, but for me, it was kind of I was clearly missing something. I didn't
Yeah.
mind pressing the button. I was trading the DAX at the time.
Okay.
I still
Oh,
trade
the
the DAX a
DAX.
lot.
That moves
Ah,
like a face ripper, I call that one.
for sure, but the times were different. You're trading things like the Bund, the Bobble, the Shats. You could be waiting an hour for a fill. So the
Yeah.
markets have changed a lot, but I like that speed of the DAX, and I still do.
Yeah. Yeah.
First and foremost, I'm a scalper. I like to be
Yeah.
in and out, take my money off the table. So there was
Okay.
definitely something missing, I thought, from trading, and I felt like I was treading water. And
Mm.
at the end of the day, when you're young, you're still all about the money, and I was,
Yeah.
very money
Yeah.
orientated back then. So I was kind of thinking, well, I must be missing something. What do I do? And then luckily, I'm a nice guy. I get on with everybody.
Mm.
They offered me a job in the risk room.
Okay.
So I took a behind the scenes kind of role, and ended up risking the traders. So I got to see how everyone traded. How kind
Yeah.
of
Yeah.
everyone's different style was, what they traded, the
Yeah.
products, the sizes, that kind of stuff. And that's when I really kind of a few things clicked for me, and it's like, well, I'm going to go back to trading. Then
Mm.
at least I've got some real world experience, as in how the big guys really really make their money. And that
Yeah.
was all.
What a brilliant place to learn in the risk room. You get to see every strategy that people are trading, the kind of risk they're putting on, the kind of gains, their consistency, their win percentages, that's just a fountain of knowledge in there. And what were some of the real takeaways from that room, Steve, that you learned? Was it more about the strategy itself? Was it more about managing risk that seemed to be the main key to success? Was it the psychology of these traders? Obviously, you couldn't tell the psychology from within the risk room, but what was it that sort of separated some traders from others?
Yeah, I mean that's a great question. I mean, you have to remember, the risk room is pretty sacred. Even as a trader, you
Yeah.
don't get to go in there. You don't get to see what everyone does.
Mm,
So yeah, a lot of insights, and the main one that always stuck with me was size. It was always even the guys doing your butterfly condors. It was with size. The
mm,
guys
mm,
scalping the bund with
mm,
size.
mm,
People trading for very short periods of time and being right at the right time. One of my key catchphrases: they're hitting it with size.
mm,
So
mm.
let's don't get me wrong. Nobody likes the risk department. If you're getting a call from me, it's never
No,
good
yeah,
news. But when they
yeah,
do want something from you, it's like, well, if something happens, Steve, I want like 1,000 lot fund limit, or
mm,
I'd like 500 euro stocks because they
mm,
would hit it when something happened. So that was the
yeah,
key thing for me, being able to hit the markets when there are opportunities, and to
mm,
be able to what you'll find with a lot of retail traders is they know it. Okay, everyone knows this. At some point, you've got to scale up, but some
yeah,
people can scale up, some people can't. Some
yeah,
people do it too quickly, over risk and lose, can't recover from that loss.
yeah,
So there wasn't, like a light bulb moment where I thought, all I got to do is size up, Steve. And listen,
yeah,
I like my size. I've traded very
yeah,
big size for a retail trader, and it's come, with its up and down moments too. Sometimes
yeah,
I've
of
gone in
course.
too hard, too quick. Sometimes I've got it right. But for me, it's especially when you're scalping and trading relatively short periods of time.
Mm,
I know the way I'm built, my psychology, my strategy, my motivation for trading.
yeah,
It's that time and money combination,
yeah,
and
sure.
that's really kind of what I've been homing my kind of skill into, and especially as I say, because I'm a pro retail trader, so I
Yeah,
still trade in a retail platform. So that
yeah,
just means I have to, I'm trading 1,000 lot position. You've got to scale in because there's
yeah,
only a
yeah,
max clip size you can use. And
yeah.
so there's certain elements that I took from other people. I mean, you can never, I think, truly just copy someone's strategy as a
No,
trader. You have to have it as your own, and you have to kind of have faith in it. And that's what
yeah,
a lot of people will struggle with in trading, because it's like, just tell me what to do and I'll do it.
yeah,
So it doesn't really ever work like that. I
no,
mean, elements it might, but when you again, you're trading more kind of, there's a phrase going around that people like using at the minute: liquidity sweeps or
yeah, yeah,
volatility. I like catching a move, so I like fading,
mm,
into a move. You're
yeah,
going to get less of it the more you see on the screens. The less you're going to get, and like breakout moves, especially as we've seen in the Nasdaq.
yeah,
The S&P, for instance, we've had
yeah,
big, kind of sell-off days, and they were
yes,
the kind of like the great opportunities where you could hold trades, a little bit longer, over maybe hours. You see,
yeah, yeah,
my shortest trades are minutes, but I'll never trade for longer than a trade for 8 hours. So
yeah,
I'm that window before.
yeah,
So
sure,
and
yeah,
that kind of stuff, that's what the trading floors were designed for. You
yeah,
sat there, you sat on your hands when you saw an opportunity, you hit it, and once
yeah,
you've kind of hit it and you've made the money, it's very difficult to trade any other way. I don't want to be
mm,
sitting watching my screen for 8 hours a day. That's not
no,
really what I do. I don't certainly want to be, trading and putting stops in. I don't really kind of, that isn't my area of expertise. I'm
yeah,
managing the trade constantly, looking at it and looking to take money off the table. So the
yeah,
more time I introduce into my trades, it's generally because I'm wrong, or
yeah,
I'm
yeah,
trying to get too much out of the trade. So for
mm,
me, sub 15 minutes is generally where I've been the most successful. And that's what I
okay,
call a retail scalp, I guess. Anything
yeah.
longer than that, the trade turns into something else.
Yeah, so and couldn't agree with you more, Mike. When it comes to I could show somebody a strategy and they wouldn't be able to trade it, right? It's all
Hmm.
about your personality, getting something that suits you. But obviously, the basics of understanding price action is a good foundation of where to start. But then build your own strategy from there. And we'll delve more into your strategy a little bit later, Steve. But I really wanted to focus on the environment of this, the trading floor. right?
Mm.
And I'm sure you've got some crazy stories about that. Did you have sort of traders throwing keyboards across the room, smashing monitors, throwing people out of windows? You know, what was some of just sort of paint a picture of the environment of that trading floor and just some of the crazy characters and stories that went with it.
Yeah, I can't name any names because I still know some of these people, but yeah, I've seen it all, mate. I've seen people get the mouse, throw it across the room and smash it, then scream to IT, "My mouse ain't working!" and it's smashed into a million pieces on the floor. I've seen people asleep under the desks, people disappear for days and then come back. Um, I mean, this was the early days, the very early days. Gibraltar was a little bit wild west out there. When I
Mm,
was in the London floors, it was a lot more kind of professional, as I say. But you have to remember when I first started, it was just after the live floors had closed. So I've got a lot of old school pit traders that made the
right.
transition to screen trading. So you've got like
And the pit
so
traders, Steve, just for the viewers, are the guys that were there physically, at the London Stock Exchange, buy, sell, 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 and then they move to virtual markets.
That's exactly right, exactly right. So yeah, I mean, talk about characters. Yeah, there were certainly some characters, and at the end of the day, like most of the guys were pretty genuine. You know what I mean? They were like the work hard, play hard. It wasn't necessarily Wolf of Wall Street. Chucking dwarves and that kind of stuff. I mean,
No, Mike, you've ruined my
yeah,
image there. No, I'm only joking.
but there was certainly an element of boys being boys, and
Yeah,
that again when I was in London, I was trading on the floor there. That's when it was almost the tipping point because you get the adrenaline buzz of the floor. You've got guys with the screens. You've got guys going out buying Rolexes. All these things are true. People going out on a good day and buying a Ferrari. Seen it. It's all real.
yeah,
It has happened,
yeah.
and
That is a
and
good
all that
day.
kind of. That is a good
Buying a
day, and yeah,
Ferrari.
yeah, but these things, it was the real deal, mate. Like there was some seriously big traders, back in the day when I was on the floor. But it all kind of did calm down eventually, and after a few years, the kind of trading floors became very much a new generation of. It was all very professional and definitely silent, mate. You're only making a sound if you're getting hurt. The best
Yeah,
traders, just the guys in the flip flops, not making a sound. And they could have any size position on, and
yeah,
that just kind of goes to show the psychological transition from the pit guys, where it was all about
mm,
noise and aggression. And obviously, I'd never been on the floor, so
yeah,
I'd seen the same stories as anyone else, and the pictures, the two phones, the buy sell, all that stuff. That
yeah,
was before my time. So
yeah,
yeah, as we kind of like progressed into that more serious side of it doesn't matter how aggressive you are. You can punch your screen all you like. It's not going to change anything. If anything,
no,
it's gonna harm your ability to
yeah,
trade. And then that's when I guess the kind of new kind of breed of traders kind of came, a bit more technical based, much more focused on the squawk system, what was being said, kind
yeah,
of trying to jump on moves. I mean, it was everyone always looks back and say it was easier back then. It was just different. I think there was more edge.
mm, mm,
When you're a speed edge, you could
yeah,
be in and out, lightning quick, and that's what you paid for. That's what
yeah,
you paid for the
yeah.
the screens, the
Execution
feeds,
speed. Yeah,
yeah, the DMA and all that kind of stuff. So yeah, obviously it did serve a purpose. But then, as I say, towards at the end of my second time trading on the floor, uh, it was kind of a decision point for me. It's kind of like, yeah, you can carry on that kind of boys' club, or you can look for something else, and
yeah,
maybe to see what you can do on your own. Because
yeah,
ego, as you know, is a killer, and
mm,
I'm
mm,
just like
mm,
everyone else, mate. I have to be the best, and
yeah,
then you're measuring up yourself to some amazing guys. So maybe you
yeah,
just have to be the best you can be. So that
yeah,
was my decision to go and start trading retail on my own,
yeah.
and yeah, I did
And
much
how did
prefer that.
how did you find that transition, Steve, from going from a quite a manic, trading room floor to sort of maybe trading from your own office or even from home? And how did that transition feel? Did you feel like you was missing out on something, or did it feel quite natural and felt like that was the right move for you?
It felt completely natural at the time, and it's something I needed to do. I needed less distractions and then just focus on what
Mhm.
I did. But
Yeah,
looking back now, do I miss it?
no.
But then I'm
Probably better
old.
for you.
I'm 45 then, mate. I'm a dad. You know, we all
Yeah,
hanker for the good old days, don't we? Of,
yeah.
of that kind of stuff. But yeah, at some point, you
And
know,
better for your liver, Steve, I imagine, not being on the trading
well,
floor.
absolutely, mate. Absolutely. Better for the liver. But yeah, I think it comes to a point where, if you're going to take trading seriously, you have to treat it to some respects like a business. And it
Yeah,
is a solo sport. It is, a mental game, and you are on your own. At some points, you've got to just decide no one's watching. It's you against the
mhm,
world, and off
yeah,
you go. And yeah,
yeah.
there was some teething problems as well. Kind of the averaging strategy took a while to get into, and finding out the
Mhm,
products.
mm,
Because I found that really, when you're on the floor, a lot of people specialize just in one product.
yeah,
So I kind of, started to kind of, because you don't want to pigeonhole yourself. I didn't want to pigeonhole myself just to be a DAX trader, because it's
yeah,
not always going to be the opportunity, that you want.
mhm,
So I only kind of trade 8 products and have done really for the last 10 years plus.
yeah,
And so it's becoming like, a technical expert. And how I describe it is, kind of every market has its own personality. So you get
yeah,
to know that market, and you understand, the size, the types
yeah,
of movements. I'm very much the way I kind of am as a person, very much, see patterns in everything.
mm, mm, mm,
They say as a trader, don't look at your P&L. That's
yeah,
nonsense. I'm a scalper. So that P&L
mm,
can switch in seconds, because
yeah,
direct market access. You're trading, simulated
mm,
markets through a broker. So I am watching the P&L, and you can see patterns in the P&L. If I want to
yeah.
take it, I'll take it, because how many
Okay.
times you've been on side, and
Mm,
then you look, and the order book's moved, and bang, that
yeah.
that
You're
thousand,
like, I
two
wish I
thousand
took some
profit.
profit. Yeah,
Exactly right. Exactly
yeah,
right.
yeah,
So there's a lot of confusion, I think, with a lot of people that talk about longer term trading, and really just spilling over into the investing mindset. Whereas
mm,
trading and scalping, well, I predominantly do, is all down to speed. So
yeah,
like, again, for me, every second counts, and there's a pattern in everything, a pattern in the charts, obviously, but I think there's
yeah,
a pattern in the types of movement I look for, patterns sometimes in the P&L, patterns
mm,
in the way that I kind of trade certain things. As I say,
yeah,
when I fade moves, I'm looking to increase size into the market, and I need that P&L to flick back to cover the position. So I'm looking at specific types of movement that might only be there for a few seconds. And like
yeah,
I said, it's not the way everyone can trade or wants to trade or should trade. That's not really what I'm here to promote. What I'm saying is
mhm,
everyone has to have their own strategy and their own kind of
yeah,
belief that what they're doing, in the markets is something that they can kind of, replicate, because that's all really it is, isn't it? Trading, just
yeah,
replicate doing things with some sort of consistency, and
yeah.
managing the emotions, and then the obvious one that no one likes to talk about, the risk.
Yeah, it almost becomes boring, right? You just do the same thing day in, day out, rinse, repeat. And that harnesses consistency, right? Um,
Exactly. That's why
yeah,
people kind of, fade into this world that you can automate everything, and you can have EAs and algos. The
yeah,
amount of times people have come to me, like
yeah.
literally had a rocket
It's really,
scientist, bona
yeah,
fide, come to
yeah.
me and say, "I've wrote this code for the stock market. It wins da 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 the amount of the time." I'm like, "Well, what do you want from me?" He goes, "Well, I just want some money." So
Right.
you're a rocket scientist, mate. Why do you need my money? It's just like, you believe in it, you'll back yourself, mate. That's what trading
Yeah,
is. But
yeah,
that's the
and
difference between quants want to be right and people that are
yeah,
traders and want to make money. That's the difference.
yeah. It's sort of that saying, "This isn't rocket science." It actually
Mm,
was.
absolutely, mate. And a good guy, and a good guy. But at the end of the day, trading, as I say, trading for me is, you have to have it. We've all met someone that's got it or a version of it. Some
Yeah,
people are born with it, just have
yeah,
natural it, trading talent, whatever you call it. And some people manufacture it. But
yeah,
somewhere in you, if you're going to be anything, professional sports player, you know, top in business or something like that, there has to be that belief in
yeah,
your gut, that level of it. 'Cause if you don't have it, you won't make it in trading. It's as simple as that.
yeah. And sometimes we talk on the channel about there's an element of feel, right,
Mhm.
to trading. And that obviously comes with years and years of experience. And it's difficult to quantify that feel.
It
So,
is.
is that something you have this feel yourself, Steve? Is it something that can be taught? What's your view on that?
I mean, it's a belief. It's a belief that you can
Mm,
do it. So it's different than the imposter syndrome. It's
mm,
it's it's almost like you've got this inner belief, and it's a gut. It's almost like, I think, physical feeling as well. That, and it's something that, again, you feel when things are right, and you feel when things are also wrong. But you've got to
Mhm.
trust it, and it's very difficult to explain. Obviously, I explained it better in the book, because I had more
Yeah.
time to kind of write down kind of scenarios and stuff. But we've all met people that have that. That it's almost like they put you at ease. It's
Mhm.
like they have an aura, they have some swagger about them, and it's not arrogance. It's just
No.
sometimes when I've met lots of different people all over the world, traders, very, very rich individuals, billionaires, and like there's certain people that just have that quality, that presence.
Mm.
It is very difficult to describe, but you
Yeah.
know that when you meet these people that they have it and you can feel it. And I think for traders, you have to manufacture a level of that feel, that it in yourself. And it's that belief that, you are entitled to be there, you are entitled to succeed and to make the money. And that, again, it'll come in different ways for different people.
Yeah.
Because if you just think, you're it, as in the dog's bollocks, market will smash you. If you
Yes.
think, I've done something, I've proved it with back testing, or I've proved it with
Mhm.
controlling my risk, or I've done it with that, whatever it is, there'll be one part of trading that people are very good at and the rest not so good at, or rest
Yeah.
just average at. And that's
Yeah.
what people forget. It's like the golf analogy. You can be,
Yeah.
great at driving, got to have your short game, got to be able to
Yeah.
chip, you got to be able to putt, mate. Yeah,
Yeah.
drive is for show, putting for dough. So
Yeah.
it's no good trying to do a round of golf if you can only drive.
Yeah.
And
Yeah. It
trading's
really.
like that.
Yeah. Yeah, exactly. When you think of your trading edge, do you think of your strategy, entries, exits, and every eventuality you can find yourself in the market? You've got your money and risk management, and then you've got the psychology of trading. And this is, we always talk about this. This is your trading edge. And for each of those, Steve, what are some things that you found difficult on your trading journey to overcome? How did you overcome them? And just any general tips and advice about those three things. I know they're very broad, but just some general idea on each one.
Yeah, that's a good question, actually. There's a couple of things that I find hard to get over. And again, I do reference in the book. One of the thing is, the hardest things for me is to get over is a belief in the system almost. Like,
Mm,
if you know enough about the data, enough about, the kind of economics, it's like that's going to translate into training success. Not
mm,
always about being the smartest person, understanding everything. The markets are too efficient for that. And that kind of brings me to the thing the thing I've found the hardest to get over is having a bias. So
mm,
having, like a buy or sell bias in a market just because of how I see the world and how I interpret it.
mm,
So that's really difficult. And again, what I try and do, and especially when I'm scalping, is be market neutral. I call it. So
mm,
just be able as happy to scalp buying as I'm happy to scalp, selling. It's all
mm,
about the money at the end of the day, being in, being out. It's more
mm,
when you move into the longer term trades, the 2 hour average trades I call them, or a day trade, which could be up to 8 hours. I want a market to do something, and that's a very dangerous position because you know what a market is potential to do. But then you get
mm,
into that situation where you could be leaving money on the table, which, what was I trading? Wasn't long after, it's about a couple of weeks back, and I was trading the DAX. I was 20 grand on side in like 15 minutes. I was like, nah, we've had a gap here. It's going to go. And I watched it. I said, no, no, I'm not going to take the money. This is an average trade. I put it
mm.
on. It could be up to 2 hours. I'm going to watch it all the way back to zero.
Yeah.
And you click and you're like,
Yeah.
well,
No.
at least you got conviction that it was a different
Yeah.
type of trade for a different reason. We
Yeah.
just had the Trump tariffs, coming out. Again, you can make a million reasons why I thought it was going to go down. It did go down, and
Yeah.
then it stopped, and it came back. It didn't break the bottom. It didn't break the lows. It didn't turn into that kind of more day average trade scenario where the market just
Yeah.
keeps making lows. But no harm, no foul. But some people would wait their entire lives to make 20 grand in 20 minutes. But
Yes.
that's just the way it goes, mate.
Yeah.
It swings and roundabouts. You can't always get the big trade, and certainly, when you get to a certain level and you can make, large amounts of money very quickly, that becomes addictive. And that's
Yeah.
another battle you have,
Yeah.
because that's something I really fell into when I first started trading. I
Yeah.
had some
Well,
some
I,
big
I
ones that
imagine you want to be in the market all the time. You're like, right, I've made this amount. The psychology is I can make more if I'm in the market more, right?
Well, yeah, and then when you kind of make an amount of money, you think that amount of money is normal. So, like, a bloke from Bolton,
Mhm.
in his early 20s making 10 grand in, a couple of minutes, it's like, yeah, well, let's just do that every minute. Come on, we're awake.
Yeah,
But it
yeah.
doesn't work like that. So there's a very
Yeah.
steep learning curve for me for, expectations and, kind of, what markets can actually do. So yeah, the
Mhm.
older you get, the more you trade. You'll know this. Everyone you've had on your podcast, I'm sure. One of the biggest things is waiting, being sat on your hands.
Yeah,
Waiting for the right time, waiting for the opportunity to hit things. And
yeah.
I keep my clip size relatively large. I don't, I don't chase trades. I wait for the
Mhm.
markets. And yeah, when you get to a certain level, it isn't worth me turning up to make a couple hundred quid from a trade.
Yeah,
I'd just rather not trade. I'd rather not do it. So
yeah.
it does become more difficult, I guess, with a level of experience to to kind of balance that out of, how often should I trade? And that's where the goals kind of come in that I think a lot of people don't have. So I kind of have a yearly target of what I'm willing to trade for. And if I
Yeah,
can't see me making that, I just won't trade. Because
yeah,
what's the point of turning up and like sporadically making a grand here, a grand there?
yeah,
So that's where that's kind of become the older you get, and the more, I guess, security you have and that kind of stuff.
yeah.
It becomes more difficult to see why you trade because you're not trading
Mhm.
for the money. I wouldn't trade unless it's for the money. As
Yeah,
you said rightly before, like trading becomes boring, robotic, monotonous. So
yeah.
if you're not making the amount of money to make it worthwhile doing your time, don't have to
Mhm.
do it. I can do something
Yeah,
else. So
yeah,
that's part of every trader's journey. I mean, I'm
yeah,
sure there are people out there that trade every day just because they want to, and
yeah,
that's fine. For me, it's a work-life balance. It's a time thing.
yeah.
I value my time over anything else. So my
100%.
time is much more important than sitting in front of a screen for 8 hours. And then you might not trade. We've got so
Yeah.
much technology. My office is already set up here.
Mm.
I'm renting the house most of the time anyway. I check levels on my phone. I've got alerts. I'm looking for
Yeah.
specific types of price action. It can be like, yeah, something's happening. I mean, you never switched off 100% from the markets.
No.
You're always having a look. So
Yeah.
it's kind of like you almost like I'm expecting that to hit that level, but it's how is it hit that level? How has it got to
Mhm.
that level? There's lots
Yeah.
of things I look for. The kind of the speed, the time element, who's going to be right, who's going to be wrong, and is
Yeah.
that the right kind of trading scenario for one of my three trades? If all
Yeah.
those things align, I will trade with appropriate size. If it isn't, I'd rather just sit out.
Yeah. Okay. And when you talk about size, Dave, obviously you spoke of some trades there. You were $20,000 on side. If you don't mind me asking, what's the biggest trade you've had? What's the most amount of money you've made in a day as a trader?
Um, About 90,000 US in a day, 77,000 US in 2 hours on gold, and $10,000 in 2 minutes on FTSE. So they're
Okay.
just three of the ones that I reference in the book actually.
Yeah.
So I don't know if they're my biggest trades, but they're the most kind of like standout trades,
The ones,
and
yeah, you.
they're just a good example of the scalp, the average, and the day trade.
Yeah.
Yeah, I never really kind of cracked the six figures in a day.
No.
I've been six figures on side, but not took it.
Right.
But to be honest, I kind of found my limit. That's enough. I don't need to
Mhm.
make more than six figures in a day, and you don't have to do that every day, week, or month either. You
No.
know, I'm much more comfortable, between, I would say, 2 and 10,000 kind of US slash
Mhm.
pounds, depending what account I'm trading for what reason, in a short period of time or in a day. That's
Yeah.
that's enough over a trading year to kind of
Yeah.
make trading worthwhile.
Yeah.
Um,
Definitely. Brilliant money.
so yeah, I mean, it all sounds great on paper, mate. At the end of the day, it takes a long
Mhm.
time to get rich quick.
Of course.
To have the ability to do
Yeah.
that, and and again, people say, "Oh, you trade big account sizes, so it's easy for you." The 77,000 that I made was off 40 lots in gold for 30 grand account. That was,
Mhm.
when Russia basically said we're gonna, invade the Ukraine. I'm like,
Right.
buy gold. So and just
Yeah.
you held it for 2 hours, and
Flights
that
for
was that.
safety. Yeah. Yeah.
But
And,
that's
and
the whole point. I think I reference a lot of things about which people. I've got different opinions, but I've seen so much in trading. I've done a lot. There is an element of luck, and it's not about being lucky. It's about being at the right place at the right time, but knowing what to do with it. So if you're
yeah.
sat there and something happens, and that's what I've said to traders for a lot of the time, that you've got to be confident enough to press the button. It doesn't have to be massive size either. When big
Yeah.
things happen, which they will, you probably get one event every year that is
Mhm.
like very, very good. You probably get one opportunity every month to put some good size on, and
Yeah.
that's what will give you the momentum. That's what will
Yeah.
keep you going. 'Cause it's all great about the consistency. Oh, you make a grand a day, then invariably something happens and you have a loss. You can be the most disciplined trader ever. It always
Mm,
goes wrong at some point, and then you've got
yeah.
to build it back up. So there will be opportunities where you can be right at the right time, hit a market with size, and that's then bigger wins that are going to give you that all important momentum that I think
Yeah.
a lot of traders that have done it for a long time need that little G up.
Like
Yeah,
a buffer as well, right?
exactly right, because that's how professional traders use it as a
Yeah.
buffer. It's when
Yeah.
times are lean, whereas a retail
Mm,
trader might make a big trade and done something right. The next thing they do, as I've done myself, and messed
mm,
up, bang, you're straight back in. And that
yeah.
money's gone just as quick as that because the
Yeah.
opportunity's changed. So
Yeah.
there's a lot more to the mentality and the lifestyle of a trader, treating trading as a business with some kind of long-term goals, some
Mm,
monetary goals. And people, again, I talk in money. That's just the way I am.
mm,
People can talk
mm,
in percent of account, risk reward ratios. You do you. Whatever you want to
yeah.
do, that's your choice. What I
Yeah.
find is when I mentor people, they never make the money real. So the money stays in the
Mm,
trading account. And it goes
mm,
up and down, up and down, up and down. And they can end up, being up, down 10, 15, 20%, but they've never
mm,
taken in money out of the account when it's been profit. They've never
yeah.
used it. They've never spent it. They've never made it real.
Yeah.
So that's something again that I think I generally help people with when I'm mentoring them is to kind of understand that when you've made money, you've done your
Yeah.
job. You don't have to
Yeah.
necessarily go out and
Yeah.
spend it all or be frivolous, but
Yeah.
there has to
Yeah.
be some
Yeah.
reward. You have to be moving towards a goal, achieving the goal, and seeing the results.
Yeah.
Otherwise, it just stays in the account, and invariably people do something reckless, and they take a big chunk that they just can't recover from. Be
Yeah.
it financially or emotionally.
Yeah. Definitely. And with regards to sort of risk, you was in the risk room.
Yeah.
What's typical risk that you take on a trade, Steve? And what's a typical, what's sort of like the biggest risk you've seen from the risk room?
Yeah, I mean, I've seen substantial risk. I've seen people €250,000 offside
Yeah.
in a matter of minutes and hours, and then end up the day, that position's 500,000 in profit.
Yeah.
Yeah, I mean, what you'll see is in the risk room, a lot of the risk happens all at once. So
Mm-hmm.
everyone's doing either the right thing or the wrong thing simultaneously.
Right.
And yeah, I mean, generally the this is what's very difficult, you see, between the pro world and the retail world. The pro world, you have a risk team. You've got someone who's got your
Mm,
back, impartial. Yep.
yeah.
So if they see you getting out of hand or things looking too much, they'll give you a call, have a chat about it, and
Yeah.
you'll maybe made to get out or scale back or something. It doesn't mean you have to stop for the day. You can carry
No.
on. So the risk team is there as a buffer, so people don't generally blow up. I think a lot of people from the kind of retail side never have that. So you've got to become your own risk manager, and
Yeah.
people's attitude to risk, is always different. It's very difficult because I trade without stops, and again,
Mm,
that's another faux pas. You've got to use your stop, Steve. But when I'm trading very quickly and I'm trading, scalps, I
yeah.
can't physically use a stop. I'm
Yeah.
averaging
Okay.
into position, so I have to have a monetary stop because I can't physically put a stop in, and I don't want to, because the
Yeah.
whole point of the way I'm trading very, very quickly is to catch these, average tops and bottoms, and for it to flip and use the my kind of experience to get out before the
Yeah.
profit,
Yeah.
before the the risk becomes a factor. So we've all
And
taken risk as a trader. Any trader that says they haven't taken more risk than they ever wanted is a liar. I've never
yeah.
seen one trader who's been perfect in risk all the time, and it's a learning curve, mate. Nothing
Yeah.
teaches you better than losing money in trading.
Yeah.
Nothing
Yeah.
is a better leveler than losing your own money. Nothing.
It's such an unusual career, right? Is you have to learn the hard way, right? It's
And you have to
feel
learn
that.
it.
Yeah. Yeah.
You have to have that spanking, mate. You have to have
Yeah.
it.
Yeah. Yeah.
And it will
Definitely.
come for every trader, and it will. And it's how you recover, and that's again, it's the motivation and the momentum that I find that has been most helpful to people. Maybe people haven't talked about it in this way. Again, because I've obviously have traded, and to some extent couldn't make it work. I was
Mm,
never going to pay that $250,000 back, so I was like, well, go work in the risk room, see some stuff, and then
yeah.
went back to trading, then decided, yes, I needed to be on my own and do it my own way, and have no other
Yeah.
people, no interference. And that was, that's both an ego thing, a survival
Mm,
thing, a man thing,
yeah.
and just to answer to yourself and see what you can do.
Yeah.
So, I've never regretted any decisions I've made. But,
Yeah.
really for me, it's always about it's you against yourself. And,
Yeah.
I know it sounds cliched,
It is.
which it probably is, but it's one of the hardest games there is, I
Yeah.
think, because you can do everything right and still lose money. And you
Yeah.
can do everything right and make money. You can do everything wrong and still make money.
Yeah.
It's a very, very difficult thing to put everything in the trading world together and
Mm.
continue to do it for long enough that actually pays you back. Because you think about it, you put 25,000 US into an account and you have 100% return over a year.
Mhm.
Well done. You've earned less than someone in McDonald's. So, at
Yeah.
some
Yeah.
point, you've got to scale up
Yeah.
at some point, and you've got to make
Yes.
the money work for you because
Yeah.
that's so many times. And remember, if you get 100% return, mate, apart from Nancy Pelosi, you're probably beating most of the
Top
the hedge funds
traders
out
out
there.
there. Yeah. Totally.
So
Yeah.
this is
Spanking
it.
them.
So this is it, mate. So this is the
Yeah.
reality. I think a lot of people, and what a lot of people say is, they get stuck in that doom loop of learning. Well, I've just know more.
Mhm.
Then one day
Mm.
I'll do this, and one day I'll do that. And one
Yeah.
day, you do just have to press that size. And I remember
Yeah.
the first time I did, some significant size. And
Mhm.
once you've done it, you've done it. It's something else
Yeah.
you can tick off. And
Yeah.
you're in out and you're in it. You're as quick as you can, mate. You're like, you're in. You're like, yeah,
Yeah.
get it out, get it out, get it
Sweating.
out. Yeah, but I mean, at least you've done it.
Yeah.
This
Yeah.
is the whole thing.
Yeah.
It's all proving to yourself that you can do it. And then, yeah, as I say, everyone I've ever met um, has the same trading journey. Okay, it's
Yeah.
the same. Might reach different parts of different parts on the timeline, different than different people. But you've got to experience the highs and lows. You're going to
Yeah.
make the mistake. You're going to over risk. You're going to lose some money. You're going to make it back. You're going to say, "Is this worth it?" And then traders at the end, will I do this or this?
Yeah.
Or you carry on like that forever, and then you make one mistake. So I
Yeah.
mean, listen. At the end of the
Yeah.
day, I'm not trying to say there's some magic formula I've got or some strategy. My biggest strength as a trader is I can just take more pain than short term pain than most people. I
Yeah.
can hit the button when it counts, and yeah, and like I said, I mean, I've just reached a level of kind of trading and money where I'm happy that I haven't had to go to an office really for a long time, and I've been
Yes.
able just be able to get by and do things my own time and my own way. And if I
It's
had
the
my time
freedom.
again, it is the freedom. But if I had my
Yeah.
time again, would I be a trader? I don't know. It's a lonely game. You spend a lot of time on your
Yeah.
own, and
Yeah.
I've got a couple of dogs. They both have voices. I talk to my dogs. Am I weird? Am I weird? I don't know. But I think you
Yeah.
have to get used to it at some point. Like trading. There's all the upside in the world you could possibly wish for, but there's some real world downsides. You have
Yeah.
to be a certain type of person. Going back to that and you have to be prepared for the isolation. And you
Mm.
can't really talk to anyone about trading that's not a trader.
No, I always joke when I talk to my mates down the pub about candlesticks or euro US dollars hitting a support level. They're like, Tom, shut up. We don't care.
Yeah.
Right? They have it's a foreign language. They have no idea what I'm talking about.
Non-traders
So,
don't care, and they love you when you make your money, and then you're just an idiot gambler if you lose it.
yeah, very true.
Simple as
Very
that.
true.
Simple as
Yeah.
that.
All right, well, we've got just a couple more questions, Steve. If you're enjoying what Steve has to say, guys, please go check out all his social media links below. Also, check out the books that he is the author of. We've got The Pro Retail Trader and we've got The Rough Guide to Trading. So check them out, guys. They're a great read. Also, check out all the social links below as well. So just a couple more questions then, Steve.
Yep.
Obviously you've been on this great trading journey. You've had the highs, the lows. You've, many experiences, met many different traders. Just to sort of leave our listeners with something. What are some of the real top tips or pieces of advice that you would give our viewers, really? A lot of them are perhaps beginner to intermediate traders. What are some pearls of wisdom to sort of leave them with?
You've got to have a plan. Okay, so you've got to. I mean, I don't want to again sound cliched of saying trading's like a business, but you have to have an achievable plan. So look at where you want to be in a year, break it down into months, chunk it down into weeks and days, and then see that you're achieving these goals. See that you're moving forward. Because if you don't have that ability to get the consistency, and remember, scaling up isn't just a part of consistency. Scaling up is its own beast, its own animal. Okay,
Yeah.
because the first time you scale up, you're probably going to lose money.
And just a
That's just how
question on
it
that,
works.
Steve. You know, when you say scale up, let's say, you know, you're, I don't know, an average trade, 1%, you're risking $200, let's say. You know, obviously we're not going to scale up straight to $2,000 a trade. How would you scale up? Would you do it in increments? What percentage increments, or make that jump quite aggressively?
I mean, the thing I do with traders that I mentor, they're generally trading, you know, kind of one lot or micro lots, and you just jump to 3 lots. You know, you should be trading an account size that can handle 3 lots anyway. So the risk, you know, risk as such shouldn't be a major factor, because what you're trying to do is turn, you know, pounds into tens of pounds, hundreds of pounds, and thousands of pounds. And once you can see that change in the P&L, then you can deal with it psychologically. Okay, so there's no magic way, there's no easy way that I've found over the years, apart from just actually physically setting a daily monetary finite stop. You know, that's it. And then you put your size on and you trade. And if you know you hit your daily stop, try it the next day. You know, there's no magic way. You know, sometimes, you know, some people can handle it, some people can't. You know, some people will never get over that sizing issue, and that is just a real fact of reality. But I mean, for me, it was kind of the light bulb moment when I put my first 100 lot on, and then it was kind of like, right, you know, where can we kind of, you know, take that? And then, you know, I remember, I think my biggest position has probably ever been 2,500 lots.
Christ,
You know, so yeah, no, that's big size. That's big
Yeah.
size, but it's only in certain conditions. And you know, you don't always make the most money from your biggest size trades either. You know, so it's when you're very, very sure of the outcome. Sometimes it requires the most side, and you know, it takes the time element out. You've got to be right, or else you're in big trouble. You have to be right, so you're in and you're out. And you know, again, some of my bigger trades have been allowing that element of time on smaller size to go. So the pearls of wisdom really is really difficult, because that's what everybody wants. It's a process. Trading's a process. You start here, you end up here, and everyone goes on the same journey. And as I said, people hit different points at different points in time. But the thing is, you have to be in it for the long term. As in, you've got to be in it for at least a year or 2 or maybe 3 to be getting to that overall goal. If you think you can just come and fund an account, even if you've got money, some of these are the worst kind of traders. People that's come in, oh, well, I'm a property developer, I can put 100,000 into the account. It's just like, right, great. You're going to lose all your money, by the way. No. It's a great system. And then they lose the money because the money's not really that important to them. And then but then again, I don't want to go into it too much. It's in the book. There are 2 types of characteristics of trader, and that I've spotted and done. And you know, they kind of overlap. But looking for this pearl of wisdom, there's no pearl of wisdom apart from, if you want to succeed in trading and you want to eventually scale up and trade and make money, you have to do it. No ifs, no buts, not when. Pick a point in time, pick a point in your account where you think you can maybe, you know, risk some more money or play with profit, whatever it is. Some point, every single trader knows out there that more size equals more money. I know people don't like talking about trading that way, but that's the absolute fact. That there's no other way of making money in trading. And if you do, then you turn into an investor anyway. You're bringing days, weeks, and months into your trading. And I don't see that as trading. I'm talking about day trading, very small time increments, you know, very kind of short periods of time during the day. That's what I refer to when I refer to trading.
Yeah. Okay. And brilliant, Steve. Really enjoyed talking to you today, Steve. Just one last question. So, you know, when did you get the confidence in your trading, Steve? You know, how long into your journey did it take you to have the faith in your system and your strategy and the belief in yourself to start hitting the trading with size? What was the turning point, and how long did that take for you?
Well, as I say, you know, there's the 2 trading floor kind of stints, you know, where I did was on the floor, and then when I went, you know, kind of pro retail, as I call it, that was about 6 months to kind of, you know, figure out the sizes. But I'd already been trading for a while, you know, by this point, so it wasn't like I wasn't a new trader. It was just more getting used to kind of like my averaging strategy and how I wanted to trade. So I'd say it took 6 months to get to a level where I was at the 100 lot mark. and I could take the ups and downs with trading that kind of size. It was a good couple of years before you start moving into the 500 lots and the kind of thousands of lots. And you'll find as well, there's periods in your time where you want to trade that size, and there's periods in your time where you don't want to trade that size. So again, it comes back to that overall goal of what you're trying to achieve for the year. Sometimes you think that the market conditions are right, or I was building a house at the time, I need to make more money. So I went out, made a bigger size, and made more money.
Yeah.
Built the house now, don't need as much money. So there isn't the necessary drive to go balls out and be, the 1,000 lot trader again. You can still make decent money off, 100 lots, but 100 lots to people be like, wow, it's amazing. Like to me, it's 100 lots. Not here nor there. And that's just conditioning. That's just conditioning and time and doing it. Not saying it's like big boy, look at me. It's just it's like anything, isn't it? When you've done it, you have done it. And when you scale down, it's easy. Well, not easy, but it's like, it is a different thing. It's a different experience that when you are trading such large amounts of stuff.
Yeah, sure. And last question, I promise, Stephen, I'll let you get going. Last one is, so you're trading, you're in and out in a short period of time. I know you have different time frames with your trading. Some could be a scalping within 15 minutes, half hour. Some could be a few hours long. If you're in a trade for such a short period of time, is it purely technical analysis? Because I imagine fundamental analysis or geopolitics don't come into that trade. Or are you looking at technical and fundamental?
There's always an element of fundamental and technical. If something fundamentally hits the market, you have to remember these days, there's very few things that really just shift the market. There's so much information out there, so many algos, so many kind of things. So it has to be something the market's not expecting for you to jump on it. And if it is, then it probably won't be a scalp anyway, because it's going to be a market moving event. So you're going to have to stay in it for a couple of hours, like the gold trade. So yeah, a lot of the stuff will be technical. I have my own charts that I wrote about 10 years ago. I view charts. So all my levels are based on Fibonacci and things like that. So I'm generally buying and selling to levels. I don't care what anyone else thinks of their levels. That's down to them. I don't care what the experts say anymore. I discount most of what the experts say, to be honest. So it's what I do when we're approaching one of my levels. So yeah, you're right. Yeah, generally it's a lot of it is just technical and correlations. The 10 grand I made in the FTSE. FTSE was up, S&P, Nasdaq down, DAX was down. So a little scalp, 2 minutes, bang, out. But this is the thing. That's just an experience thing. That's just being there, being sat there, watching the markets, and just seeing a short-term opportunity. So yeah, I mean, it used to be. I said trading was 80% technical, 20% fundamental. That was the way I looked at it in my first book, where I wrote 10 years ago now, The Rough Guide to Trading. But now I see it as much more 50-50. But again, as I say, you have to be careful with the fundamentals these days, and especially the narrative. You have to filter a lot of the kind of stuff out. So generally, yeah, I would say a lot of it is just down to technical trading, believing in your own levels, your own setup, and just your experience of the trade type, the market conditions that you've had the most success with in the past. Which, as I've always said, is scalping for me, being in and out, taking that short-term pain, taking your money off the table. I'll tell you what, you never go broke taking money off the table.
Yes, I preach that also, Steve, big time. Yeah. Okay, well, Steve, really enjoyed speaking to you today. And guys, if you've enjoyed what Steve has had to say today in the podcast, then please check out all his social media below the vid. Also, go check out his books, guys. He is the author of The Pro Retail Trader and the author of The Rough Guide to Trading. So check it all out, guys. Really enjoyed talking to you, Steve. Very interesting, mate. Learned a lot. Appreciate your time.
Beers in Dubai then, mate.
Yeah, you're on. Yeah, when you come out, beers on me, Steve. No problem.
All good, Thanks for your time.
Cheers, Dave. Thanks a lot, mate. Bye.